Hello, my name is Tamara, and today, together with my colleagues, we are going to show you the presentation about the US financial crisis of 2008 and 2009. Our presentation consists of four main parts. I will start from the introduction, from the beginning, with the background of this financial crisis, and I will tell you the main spheres where it spread. Then my colleagues will continue telling you about the consequences of this crisis, ending up with the summary. So let's start from the beginning. The US financial crisis started in 2007 in the US financial markets. Then this crisis spread to the other countries around the world and caused a global economic collapse. This crisis is known as the worst economic crisis since the Great Depression of 1929. Such large companies as Merrill Lynch, RBS, HBO, they had to be rescued during this financial crisis because they are not able to rescue by themselves. That's why government had to invest a lot of money in order to save them during this crisis. Western leaders who were so sure about the light regulation, they had to invest millions of dollars in order to save the world banking system. So the main spheres where this economic crisis spread, and one of them was the mortgage lending market. And it showed the early signs of economic crisis during the 2007. During the autumn 2008, this crisis started in the banking industry. And for example, such big banks as Lehman Brothers, they proved that the government is not able to save each bank, and that's why Lehman Brothers pronounced it bankruptcy. According to the Sachs, one of the economists who analyzed this crisis, there were four main threats during this crisis. The first one was a decline in consumer spending in the homes and automotive industry, which caused a recession in construction and production. The second threat was connected with the mortgage payment and loans, and the third with the banking sector, with cut on its lendings and credits. Finally, the fourth threat was the retrenchment of lending to the short loans. All together, these four threats, they combined into the one crisis. So why this crisis became global? The other economies of the big Europeans and Asian countries, such as Germany, Italy, Great Britain, France, and the Asian countries, China, Japan, they were all connected, and the smaller countries, they also depended on their foreign investment. That's why this crisis started in USA and then spread to the other countries and caused the same hard economic situation over there. The US government tried to save the big companies and banks by investing and giving big loans, but it wasn't very successful because it missed the first early signs of this crisis, and then it was too late. That's why it had picked not to save not each bank, but to pick the biggest of them. That is all from the introduction. Thank you for your attention, and my colleagues will continue telling you about the other steps of this presentation.
Hello, today I will talk about the financial crisis in US. I'm gonna talk about the causes of this financial crisis. There are three reasons for this financial crisis. First one is the political reason, the second is regularity, the third one and the last one is the market failure. First, we're gonna start with the mortgage lending market. Mortgage lending market showed the first sign of collapse in 2007. This collapse moved to other in the industry like banking. Second, bad decision of government. The outcome of this crisis was due to poor decision by government, political irregularity and market failure, and the conflict of interest. Third, Congress failure. Congress failed to give regulation to bank. Congress used government-sponsored enterprise like GSE at the expense of the public. Affordable housing, government lowered interest rate, obligated bank to make risky loan.
Hello, Dr. Peggy. I'm gonna make a presentation about U.S. financial crisis 2007 review, and my part is second body part, and it start with mortgage lending markets. Mortgage when United States home prices declined steeply after peaking middle of 2006, it became more difficult for borrowers to refinance their loans, and it affected to adjust interest rates, and it began higher and getting higher day by day. And securities backed with mortgage, including subprime mortgages, widely held by financial firms globally, lost most of their value. And other thing that increase the level of crisis is it might be bad decisions of government, and this poor decision about political, regulatory, and market failures were first sparks of the crisis. And also Congress failure is another important thing. When government wanted to get rid of saving and loans crisis, Congress issued a decision demanding of two government enterprises, GES, as Fannie Mae and Freddie Mac, to take absolute hazard and implicit approval from government to avoid real regulations and offer affordable housing mid-led a decrease in their standards for a mortgage. And after this impacts of crisis, and there were four main threats about this crisis. First one is decline in spending in home automotive market. Another one, problems with mortgage payments and loans, problem with banks and shadow banking. And outcomes of the crisis were really big for the United States government. First big conclusion was home foreclosures, and after that loan defaults, surplus of homes on market, price of real estate declines, and banks never got their money back from a mortgage loan. And those were my parts. Thanks for listening.
Hello, I'm Yeşim Doğru, and I will wrap up our presentation. In conclusion, this modern-day depression was a historical collapse of the US economy. By the end of 2007, more than 6 million people lost their jobs. Many of the country's most successful banks announced their bankruptcy, and trillions of dollars were lost forever. The general accepted theory is that the housing market triggered this disaster, but after our research and analysis, we know there were many factors, such as mortgage lending mistakes, bad decisions by investors and borrowers, and poor regulation. We can say this crisis was caused by a failure of governance, a failure of political governance by regulators and legislators, a failure of corporate governance by banks and executives, and a failure of personal governance by individuals. After doing our analysis, we have come up with some solutions. We should eliminate government-sponsored enterprises and keep the taxpayers' money separate from the lending companies. We should put the banking and insurance companies under great regulation and not allow them to take risks. We should eliminate laws such as the Community Reinvestment Act and make it difficult to get a loan for a home. And the last thing we should do is put large banks that could not go without public funding in a crisis in conservatorship. On behalf of our group, thank you for watching.